What's going on, guys? It's Jimmy here. Welcome to our daily show where we discuss everything going on here in our country that you need to know about here on a daily basis. We got multiple things that have just happened here that you got to know about. First, we'll start with President Biden's announcement, which you might like, you might not like. It's controversial. I'll let you hear it directly from him. And then we have several other things to talk about. We got so much already going on here today already. Let's jump right in. And if you're new to our channel or if you haven't subscribed yet, make sure to click the subscribe button down below, then the bell icon. I will keep you up to date here with everything going on here in our country on a daily basis. First, we'll go directly to the president, President Biden, who has made an announcement to try to combat what Russia and Saudi Arabia and OPEC Plus, their recent announcement where they have announced a cut to oil production of 2 million barrels per day to raise oil prices and gas prices as if they're not high enough. This is what they've announced here recently, just a few days ago, so that us and the world will pay higher oil prices. Here's what he has to say. Take a listen.
Good afternoon. Earlier this year, because of Putin's invasion of Ukraine, the price of oil and gas increased dramatically. And I acted decisively at the time, and thanks in part to those actions, the price of our gas has fallen 30% from the summer highs. Now, it's down about $1.15 a gallon from their peak during the summer. Gas prices have fallen every day in the last week. Let me repeat, gas prices have come down, and they continue to come down again. They're now down more than 27 cents a gallon in Wisconsin this past week, 27 cents in Oregon, 16 cents in Ohio, 25 cents in Nevada, 17 cents in Indiana in just the last 10 days. And that's progress. But they're not falling fast enough. Families are hurting. You've heard me say it before, but I get it. I come from a family, if the price of gasoline went up at the gas station, we felt it. Gas prices hit almost every family in this country, and they squeeze their family budgets. When the price of gas goes up, other expenses get cut. That's why I have been doing everything in my power to reduce gas prices since Putin's invasion of Ukraine caused these prices to spike and rattle international oil markets. Excuse me. I focused on how we can protect American families from that spike and give folks just a little bit of breathing room, as my dad would say. Today, I'm announcing 3 critical steps that my administration will take to reduce gas prices at the pump. First, the Department of Energy will release another 15 million barrels from the Strategic Petroleum Reserve, extending our previously announced release through the month of December. Independent analysts have confirmed that drawdowns from the reserve so far have played a big role in bringing down oil prices, bringing them down. So we're going to continue to responsibly use that national asset. Right now, the Strategic Petroleum Reserve is more than half full, with about 400 million barrels of oil. That's more than enough for any emergency drawdown. With my announcement today, we're going to continue to stabilize markets and decrease the prices at a time when the actions of other countries have caused such volatility. And I've told my team behind me here to be prepared to look for further releases in the months ahead if needed. We're calling it a ready and release plan. This allows us to move quickly to prevent oil price spikes and respond to international events. Secondly, we need to responsibly increase American oil production without delaying or deferring our transition to clean energy. Let's debunk some myths here. My administration has not stopped or slowed U.S. oil production. Quite the opposite. We're producing 12 million barrels of oil per day. And by the end of this year, we will be producing 1 million barrels a day, more than the day in which I took office. In fact, we're on track for record oil production in 2023. And today, the United States is the largest producer of oil and petroleum products in the world. We export more than we import, And I've still heard from I've heard from oil companies that they're worried that investing in additional oil production today will in case demand goes down in the future, and they're not going to be able to sell their oil products at a competitive price later. Well, we have a solution for that. Today, I'm announcing a plan to refill the Strategic Petroleum Oil Reserve in the years ahead at a profit for taxpayers. The United States government is going to purchase oil to refill the Strategic Petroleum Reserve when prices fall to $70 a barrel. That means oil companies can invest to ramp up production now with confidence they'll be able to sell their oil to us at that price in the future, $70. Refining and refilling the reserve at $70 a barrel is a good price for companies, and it's a good price for the taxpayers, and it's critical to our national security. To put it in context, since March, the average price of oil has been more than $90 a barrel, the highest since 2014. By selling from the Strategic Petroleum Reserve at the higher price of $90 earlier this year and then refilling it in the future at a lower price around $70, will actually make money for the taxpayers, lower the price of gas, and help bolster production, all while totally consistent with my commitment to accelerate the transition to clean energy.
So, what are your thoughts on this? President Biden says that they're producing 1 million barrels more per day than when he came into office. Also, what are your thoughts on releasing more barrels from the strategic oil reserves? Do you think this is a good move or a bad move? Everybody has a slightly different opinion on this. Is it a tool that should be used to help lower the price of gas for millions of Americans when the price of gas goes high, to help relieve the pressure of gas prices? You can see here, gas prices were going down for just short of 100 days. It was 99 days. You can see right here from the New York Times. So gas prices were going down for about 99 days. And then they stopped. And then we had OPEC Plus, Saudi Arabia and Russia teaming up, as you can see here, agreed to massive cuts of oil output, 2 million barrels per day, through the OPEC Plus nations, to basically make the price of oil more expensive so that they can make more money per barrel. And, this whole supply and demand thing. So, yeah, it's getting hot, and this creates even more tension between the world and Russia and US and Russia. If you watch my previous video, you need to go watch that as well, with what just happened between Russian bombers and Alaska and Russian hackers hacking the United States. Definitely go watch that. I'll link you to that video here after that. Also, as inflation around the world is soaring, remember the US inflation around 8%. The Social Security raise is going to be 8.7%. And the most recent core CPI for the US just came in at 8.2% here in the United States. But if you've been watching my channel, or if you follow what's going on in the world, you know here that it's not just the US. It's pretty much everywhere in the world. And, well, the United Kingdom, this is happening everywhere. Canada, Europe, the United Kingdom. Well, the United Kingdom's inflation reading just rose to 10.1% from 9.9% the month before. 10%. You thought our inflation was high at 8.2%. They're 10%. And this here today caused the UK Prime Minister to resign. The second Prime Minister there in less than 2 months to resign. That's right. This new prime minister was only in office for 44 days, making her the shortest serving prime minister in British history. Unbelievable. Yeah. So, yeah, things are not going well pretty much everywhere. Imagine having a new, basically, president in the UK for only 44 days, and this comes after the Queen, we know, passed away. God bless her. Things are looking kind of rough. Just to kind of give you another quick glance here, in Turkey, their inflation is at 83%, not 8.3%, not 10%, 83%. And what did they do? They decided to cut interest rates by 1.5% to, I guess, basically try something new. Instead of raising interest rates, they decided to cut interest rates because either they have no idea what they're doing at all, or they have just given up hope, or they're just gonna try something new and hope for the best. Yeah, you think inflation's bad here at 8%. Imagine if it was 80%. I know it might feel like 80% here. I get it. But 8% and 80% is literally a completely different stratosphere. Unbelievable. By the way, their dollar, the Turkish lira, touched an all-time low. It's down 50% against the greenback in the last full year. So just to kind of give you an idea of how bad it is in other countries around the world. This type of stuff is happening everywhere. And their Turkish president doesn't believe that raising interest rates increases inflation rather than the other way around. How is that working for him so far with the 83% inflation? Yeah, it's not going too well there. And the Fed, the Federal Reserve, raising interest rates to combat inflation here in the US, which central banks all around the world, well, except for Turkey, which has 83% inflation, are doing. They're raising interest rates all around the world, in Canada, pretty much everywhere, all of Europe. It's a tried and true proven strategy to lower inflation. I mean, in the housing market, for example, they've raised interest rates, in the US. And now we've seen, in the housing market, it was a really overinflated market. If you had a home for sale for 300,000, homes were going for sale, and on the very first day, you were getting like 20 bidders, and the homes were selling for 350,000. Okay, an overinflated market. It wasn't normal. How it got that way is a whole another story. But that was an overheated and overinflated market. Now home prices have come down. Now you can actually get it at asking price, or actually below asking price, because the interest rates have gone up. So the prices have come down. But we're seeing a massive housing recession now. What the Fed said, a great reset. U.S. mortgage rates reached 20-year high already, and interest rates are going to go up again in November and next year. You can see here, mortgage demand drops to a 25-year low as interest rates climb. 25-year low. Wharton professor Jeremy Siegel warns that home prices are about to suffer their second worst crash since World War II amid Fed rate hikes. Now, you can let me know your thoughts on this in the comments. Do you think this is good? Do you think this was needed? Do you think this is bad? Do you think that home prices should have stayed as high as they were, which was for a lot of people unaffordable? Or do you think this type of housing reset, the great reset in one aspect, which some people were saying, was this needed? Was this a good thing? Was this a bad thing? Problem is that interest rates are affecting people in everywhere because it's also costing you more in your credit card interest. Here's what Wharton professor Jeremy Siegel has to say.
What are the real implications? Let's just game this out. If they go ahead and raise 150 basis points in the next 2 months, what does that do? Because you think they've already risen too much, and you expect a downturn.
No, I think that I would call for, 50 now and then a stop. And I wouldn't even mind a stop, because I think if they wait, they will see how inflation's come down. Everything that's sensitive and the goods prices has come down, as it should first, and the services come down later. But I could say another five. I worry about this idea that we're going to stay in the high fours as Fed funds futures, as Powell, higher for longer. That worries me the most. I think they're going to have to bring the rate down a lot during 2023. And I think the talk of that's what's scaring the market, higher for longer, because the market does see these higher rates are going to pinch, and they're pinching the interest sensitive parts of our economy already. I think we're going to have the second biggest housing price decline of post-World War II period over the next 12 months. And that's a very, very significant factor for wealth, for equity, and the housing market. So I think that they've got to slow down and wait and see what the tightening has already wrought on the economy.
So in a way, he's kind of right. Mortgage demand has already dropped to a 25-year low here, and mortgage rates are already at a 20-year high that quickly. And I just looked it up here about credit card interest rates. The first article I came upon, credit card interest rates hit a 26-year high and are about to go higher. And then I seen the date. That was as of September 21st. And I was like, okay, let me do a little bit more research. So as of September 21st, credit card interest rates had hit a 26-year high. Then I noticed here that credit card interest rates had reached an all-time high. And this was as of October 6th. October 6th, the average annual credit card percentage rate, interest rate, was 18.79%, basically 18.8%, and are going to continue to go up higher because the Fed is going to raise interest rates again, and maybe even again, and again. Yeah. Really rough. So let me know your thoughts on this. I just literally found this information right now. We'll have to touch base on this in an upcoming episode and what this will mean. So make sure to subscribe down below to our YouTube channel. Click the subscribe button, then the bell icon, as it's completely free to do so. New videos come out here every day at 10 a.m., 3 p.m., and 8 p.m. Eastern Standard Time. And I will keep you up to date here with everything you need to know about. You can click here to watch my new video on what Russia just did near Alaska and hacking the U.S. Really good video there. And here is my newest video about millions of people getting checks that you might not even know about. So click on one of those videos next. Thanks for watching, guys, and I will see you in the next video.